on the 6th of February. That's tomorrow, and not too much of a. I mean, markets are largely expecting that the Bank of England will um, cut rates this time, and then in March potentially keep rates on hold. So the question now is whether we will have a dovish cut or a hawkish cut at tomorrow's meeting. But if you look at the pound, so this is the CFTC non-commercial net positioning. Previously it hit extreme, that high right there. So it suggests that long positioning could be a little bit overextended, but it has actually retraced back to more normal levels since then, and now it's actually back to its 2024 kind of levels, more neutral levels in that sense. And if you were to just overlay it with the pound dollar chart, when it's back to more normal kind of levels, there is some form of a near-term upside. So you can see that that two circles here is actually the I have matched it to the time frame here. There is somewhat of a upside on that. But of course, on the technical front, what I'm watching is that very near-term inverse head and shoulder formation. So I really want to see some form of a break above it, above that neckline. Of course, the greater conviction is it is able to break above that bold upward trend line that I've drawn here, which is above that 1.26 level. That will provide further conviction that the bulls are in greater control right there. Yeah, but in the near term, I'll be watching for that inverse head and shoulder formation on the daily chart. Okay, the next key event is the US non-farm payrolls that will take place on Friday. What are market expecting? 169,000 jobs gains, unemployment rate holding at 4.1%. This is a very healthy reading, 4.1%. It is sort of better than what the Fed's own projection is. So the Fed actually project that end 2024, it will be 4.2%. So now 4.1%, it means the US labor market is much stronger than potentially what policymakers expect. This is a scenario that may actually support the view that the Fed will keep rates on hold, at least over the next few meetings until mid-year itself. Wage growth 0.3%. Unchanged from the previous month. The implication for this data, I believe, is that if you look at rate expectations, actually markets already broadly priced for the Fed to keep rates on hold at least over the next two meetings. So you will really have to take somewhat of a huge deviation from consensus to really force a recalibration in terms of rate expectations. If not, we shouldn't expect too much of an impact onto Fed's rate expectations. But in terms of all of that, how does that incorporate with that tariff talk? I believe that we will actually want to see a more lukewarm, U.S. labor rate, close to consensus, but not deviate too much. Having these two strong data, we could see a stronger US dollar, a more hawkish Fed views. And if you have a very, very strong, a too strong US labor market, you actually give Trump the confidence to push on with aggressive tariff. Because, if my economy is so strong, I got a bargaining power to kind of challenge other economies through a tariff. So I'm not scared of your counter tariff as much. Whereas on the other side, having too weak a data that could actually highlight some of the greater growth risks, and with expectations for more trade tensions to potentially surface, that could keep markets a little bit worried. That could see some de-risking. So I think we will want to see a read that is near consensus, not too much of a surprise, not too much of a deviation there. If you look at the US dollar, this is the aggregate positioning versus the other G10 currencies. Kind of high, it kind of near its 2024 high. So you can see that the long US dollar trades may seems to be overcrowded, at least in the near term. And just 2 days back, of course, we've seen a huge surge in the US dollar, and then things were quick to reverse all around that tariff headline. So very hard to predict, which are the headlines that will come up next. So we really got to be more reactive here. Keep your stop loss in place. But for now, it does seems that the dynamic seems to be leaning more towards a bearish bias for the US dollar. The dollar yen, has been seeing this double tailwind. One is that the weaker US dollar that we see over the past few days. Second is that the Bank of Japan dynamics is expected to continue to raise rates. They do see some form of a shift. So in a way, they highlight greater confidence that Japan's economy is out of that deflationary cycle, and that is actually a good thing because if inflation continues to be sustainable, that means further rate hikes will come. That should benefit the Japanese yen. I think over this broader year itself, the traction, the promising trade seems to be leaning towards a stronger Japanese yen. So you can play the yen crosses. And we believe that the Japanese yen could continue to strengthen more further down the line. We also have to take note that for Japan, April is actually their wage negotiation period. So March, April, we should hear more of their companies coming out to say that they are willing to raise wages by 5%. That should help to fuel many of those hawkish BOJ views also. And inflation has also been above target now. Recently, we are seeing a slight resurgence in terms of inflation. So all of that does seems to point towards further rate hikes from the Bank of Japan through the year. So dollar yen kind of breaking below that channel formation. Of course, if it can break below that 200-day moving average, that should give further bearish bias. And we'll see, if it breaks below that 151.8 level, then we could see further downside towards that 146.63 level. Okay, so that's all from me. If you have any questions, do key in the question tab. I'll see if I can help to answer. First question, dollar yen, please. Yeah, I think I just touched on that. Second is NVIDIA share price pullback about 10% after DeepSeek was announced. Will there be further downside? For NVIDIA, I think currently share price is hovering around that 200-day moving average. And what I have learned throughout that trading journey is that nothing good may happen if the share price is below the 200-day moving average. And now it is kind of hovering. I think just 2 days back it actually dipped below, but yesterday it managed to recover. So there's this ongoing tussle around that 200-day trend line. So I would say not to be too quick to shrug it off. I think there is still that potential for it to hold up. So until we see that significant bearish setup below that 200-day moving average, then we could talk about a deeper pullback. But for now, I'm still keeping up my options open on potential deep buying in that sense. Google future share price retraced significantly by 8%. Yes, Google, AMD as well today. Is this an opportunity to enter for mid or long-term investment, or there could be more downside? Yeah, I think some of the downside, the initial downside reaction is because of Google's capex. So they're actually spending much more on AI infrastructure moving forward, which is more than what market expect. So markets are reviewing whether you spend so much, will it actually pay off? What is the ROI on some of those investment? I think once that is sort of priced in, generally what we see, just to give you an example, in the case of Meta. So previously Meta seen a huge downside reaction after earnings because they also throw in a lot of money into the AI investment itself. But thereafter, if you look at Meta now, is actually all-time high, because they are able to show that those investments actually paid off. So it will take time. I believe Google will be the same case. I think they wouldn't want to commit so huge of a capital without knowing that risk that they're getting into. So for them to throw, that amount that is above market expectations, to me it does seems that they gauge that the returns could be higher further down the road. But of course, you got to weather through this near term kind of a downside, share price reaction from markets. But once that is priced in, then I believe that there could be room for further recovery. Okay, next is have you shared the trend for gold and silver? Yeah, but I mean gold really keeping an eye on that 3,000 psychological level. I think with Trump in place, gold has really stand out as that very attractive hedge among all the defensive assets. So if you look at defensive assets, yes, Japanese yen is one, gold is one, US treasuries, you can say is defensive, but of course that inflationary um, fears is there, which is keeping traction away from US treasuries. So gold is still that stand out at the moment. And of course, going by the trend, upward trend, which means that the dynamic should be to buy any form of a dips. And I think markets are really looking to retest that $3,000 level. So gold, silver, those could continue to find some form of attraction. Okay, next is markets may not have pricing game changer from China AI. Yep, I think you are referring to DeepSeek. I think markets does know. Okay, because when we look at DeepSeek, right, I think there are still a lot of questions that markets are trying to wrap their heads around. One is that you say that you are using lower tier chips. You say that you are able to deliver that kind of accuracy, but how true are those information? I think that is the question, because there are a lot of views that actually DeepSeek has access to the high end chips, but they cannot disclose due to trade restrictions, and therefore how accurate those are, those information are, or whether it will be really a game changer. I think that is still that question that markets are trying to wrap their head around. But for now, it does seems that markets have gotten over it, and looking at how markets react shows that markets believe that US tech dominance will continue through 2025. Yes, there may be some form of competition from China, but I think markets are saying that US will continue to be the dominant force. And if they perceive China's technology to be a threat, Trump is able to sort of step in to restrict uh, access to those Chinese technology. So China's probably DeepSeek, I would say could be more used in terms of Chinese companies, could be used more domestically. So they may lack that international aspect, because US can always use national security concern and try to curb access to DeepSeek. So I think ultimately, US tech dominance should continue. And if you look at some of the dynamics behind DeepSeek, there is some sort of a shortcuts in place, which explains why they are able to be more efficient at lower cost, so on and so forth. But if you want more clear and precise kind of a AI dynamics, I think US is still the one that give you that. So yeah, depends on how you look at it, but for now it does seems that there is sort of a less of a threat, I would say, from all of this China AI. How far do you think Palantir will go? Yeah, Palantir has been that I think break above $100 already. Yeah. So how far do I think? I think it's hard to say now. I mean, looking at technicals, I think technicals doesn't play too much of a significance now, given that you can say that it is being overbought. But I think now it's really more of buying the dips, waiting for a retracement before buying into it. So yeah, I do not really have too much of a view on that. Yeah. Okay, so yeah, I think I've answered most all of the questions. Yes, so I've overrun by a little bit, and thank you for joining me today. We will continue next week. Next week seems to be a little quieter week in terms of the economic calendar, but we should expect more headlines for Trump, and we'll try to go through that as well, along with some of the updates on the chart. So thank you for joining me this evening. Have a good one, and I will see you next week.